No, great. First of all, to follow Belsky, it's like following a LeBron. So hopefully I could live up to it. Look, when we've done so many of these types of events especially over the last, call it 3 years, our big focus is basically just talking about AI revolution, showing like this is just the beginning of what I view as a decade-long theme. And I think right now, what we've seen is the use cases. Because if you think about where we all started, it started with NVIDIA, late 2022. That's obviously was sort of the watershed moment along with Microsoft OpenAI. And 2023, 2024, obviously was what I view as a concentrated, Mag 7, very, very large cap names that ultimately benefited. But our whole thesis is it's an 8 to 10 year theme. This is only the first piece of where the theme's going. And I think now we're starting to see the software use cases play out. Now, Palantir being obviously our favorite over the last few years in terms of ways to play that, but now you're seeing it in ServiceNow. You're seeing it, what I believe is ultimately going to be Salesforce.com, and every other sort of large software play from Adobe to others. This is really going to give massive, massive acceleration. I don't think it's factored into a lot of these software names. I also think cybersecurity is going to be a huge theme. Now look, cybersecurity the last decade, we've obviously had some huge winners, CrowdStrike, Zscaler, and some others. But I think the space overall has kind of been up and down. I now view, and I don't think it's being factored into the sector, cybersecurity, specifically names like CyberArk, Palo, Zscaler, I think Checkpoint as well, names like Varonis, small mid-cap, are going to be big beneficiaries, Rubrik's another one, because you still only have 50% of workloads that are in the cloud today. And what AI is essentially doing is, we see it with the hyperscalers. Look at Microsoft, Amazon, and Google's numbers this last quarter. Acceleration, especially relative to street expectations. In a tariff environment, uncertainty, the $325 billion of capex that we see on big tech toward AI, that's just starting. And what that means is that as more data moves to the cloud, you're going to need to protect those workloads with cybersecurity. And I think that's going to lead to a lot of consolidation. And I think cybersecurity within software is actually going to be a huge outperformer relative to that sector. I think we've learned a lot over the last, call it, since early April. When all the tariff stuff hit and the chart that will be studied in labs, for years to come was unveiled. The view is, is this going to cut the knees of U.S. tech, right? Because my whole point, and many of you have heard me talk about, for the first time in 30 years, the U.S. is ahead of China in tech. I don't even think that it's a question. And I think you're even seeing it this week in terms of obviously the red carpet rollout in Saudi, UAE, and others with NVIDIA, Lisa Su, Jassy, and everyone else. Because there's only one chip in the world fueling the AI revolution. It's NVIDIA. Huawei, year and a half behind, 2 years behind, AMD and others. But the point is we've learned a lot going back to, if you look at this last 6 weeks, was the tariff black storm was it gonna change the direction, the trajectory of spending? It's actually accelerated it. And I think if there was ever a question about AI spend, is it a bubble? Belsky hit on it, is it a bubble? Is this a 1999 moment, .com bubble? And as someone that's covered tech going back then, I continue to view it much more as a 1995, 1996 moment than a 99 moment. And I think now it's showing because it's about the second, third, fourth derivative. You have $325 billion in capex, but for every dollar spent on a NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. That speaks to my view why we're going to be talking about NASDAQ 20,000, 25,000. I mean, that's where I think we're heading over the next few years. And I think the tariff scare moment that's now started to get settled after cooler heads have prevailed, I think it showed that like no one wants to lose their spot in line when it comes to AI. And this week, it's great that we're talking today after this week because it shows everyone around the globe, think about where we are. 4% of US enterprises have gone down the AI path. Europe, 0. Asia ex-China, 0. China, obviously, you're seeing, especially in big tech, Alibaba, Baidu, and others. Middle East, just starting. So when you start to think about the global landscape of AI, that's going to be led by US big tech, that's our bullishness where it's based. And I'm just not one like Palantir being an example. You know, you could obviously look at names like CrowdStrike and others, like valuation, stocks expense. It's always been my view, if you focus on valuation, you've missed every transformational tech stock the last 20 years. You have to be able to look out 3, 4, 5 years at normalized numbers where I believe everything's heading, because when we think about AI, it's my view like this is just the first phase of AI. It's not even just about enterprise use cases, data center, cybersecurity. Think about what's happened on the consumer side with Meta, Google, obviously Apple, which has obviously been late to the game, but in terms of their install base, and they're really going to become a conduit when it comes to AI. I mean, it's our view like one of every 3 people in the world, like they're going to access AI through an Apple device. So the consumer piece hasn't even started. The thousands of apps that are going to be built, the generative AI piece. And then when you look at physical AI, robotics and autonomous. I mean, that's why for me, like with Musk and Tesla, it was a very like frustrating period when he went all in on Doge, all in on Trump administration, because my view is like, look, you have, along with NVIDIA, what I view as the best disruptive technology company in the world over the next decade. Don't burn the house down on this moment. And I think when you look at Elon, how he handled that last conference call, he chose Tesla, and look what's happened in the stock since. Because my view, like Tesla, it's not about cars, it's about autonomous robotics. Like I think 90% of the value of Tesla going forward is going to be autonomous and robotic, physical AI. Physical AI, it's really about NVIDIA and Tesla, in my view, in terms of where they're positioned. And I think from a valuation perspective, when you start to look out over the next 3, 5, 7 years, that's the story for Tesla. It's also the story for NVIDIA. It's why I believe NVIDIA is going to be a $5 trillion market cap. And I think we're just now starting to see this next phase of AI play out. And I think it's important because it's very easy, when you're going through, you could go through any growth phase that we've gone through over the last 20, 30 years. Essentially, in my view, you can almost toss it out because this is the biggest growth trend that we've seen in our lifetime. I mean, we talk about fourth industrial revolution, but the spending we haven't even tapped in terms of where it's all heading. And I think ultimately, when you look at like the ways to play it, chips, software, the consumer piece, I view autonomous robotics. Then like names like Aqua, which I've been bullish on in terms of nuclear plays, because how you ultimately what's the energy for it. So you have to think about it like in terms of, if you're building a portfolio around AI, 2023, 2024, it was like you own NVIDIA no matter what. You own Microsoft no matter what. You still own those in size, but you have to spread out to play the second, third, fourth derivative themes. And I think there's a lot of names that are going to become AI names or AI derivative names that are not there today. And I think that's kind of like what we've been spending so much of our time on, is that who are the second, third derivative. And look, there's names like IBM, right? 115, but no one cares, minivan, right lane, broken radio, bumper sticker, kid's an honor student in 3rd grade. Then all of a sudden, Arvind comes in, CEO, Arvin understand, someone that I've known for years, he understands AI. Like he understands how to, what I've used transform a company. Look at IBM today, $250 stock. Now again, I'm not saying that it's rip-roaring growth, but that's a good example of one that shows like no one cares about it, but yet the multiple that you're going to start to get for the AI piece as a sum of the parts, I think is very, very important. I think more and more you have to view these as sum of the parts names. I'm just not someone that views it as you look at straight PE and that's the way to value companies. Because I think you miss so much. And look, we've spent, 3.5 million air miles later, last 20 years, like we spent a lot of our time on the road, understand like what are the growth trends, whether it's in Asia, Middle East, Europe. Because I think a lot of times when people in this business, like when you just sit there in a sort of echo chamber, it's very easy to get caught up just in valuation rather than the demand trends that are actually driving this. And I think, and also I'm going to talk for a few minutes because I want to have good Q&A too, because I know there's a lot of questions. It's I view it as like we're in the second inning of a 9-inning game for AI. I think besides like tech making new all-time highs, now that the tariff situation, at least you're going to start seeing more and more deals, and the market and the 10-year are basically going to dictate that they're going to have to take continued steps back on their policy in terms of Trump administration. Now you start to see the demand trends play out, and I think that's something where this now leads to the next phase of the AI revolution, the use cases, the consumer piece, the other derivative beneficiaries. And look, you're always going to have skeptics, but from a technology perspective, you can't even doubt the trend now. It's about who's going to benefit, to what degree, but I think it's important as an investor, you have to capture the theme in terms of the derivatives. That's the most important thing that I see, along with obviously the core names that we own. So I want to like try to make a pretty interactive Q&A, like 10 minutes, fit whatever time we have.
I've got a question.
Yeah, great.
So you have these large companies like Microsoft that are investing huge amounts in AI, capex. Eventually they're going to have to pay that off in their earnings, right? So how do you see this playing out with these just huge amounts of money being eventually showing up on their P&L statements?
No, it's a great question. Because like I think that's been like one of the, if you take a bear argument, like, oh, capex, $325 billion in capex, good money after bad. Look, I'll just give you an example. Like, we talk to hundreds of customers. So on average on our survey work, for every $100 that a customer spent with Microsoft over their lifetime, we believe there's an incremental $40 to $50 of AI spend that they're now going to spend with Microsoft. So to me, that's the key. So it's almost like they're building the foundation now, and capex is ultimate. And look, it's no different what Alphabet's doing, obviously. But in terms of the benefits, in terms of revenue, bottom actually showing up, I believe we're now going into that phase. I mean, if you look at this quarter, part of why Microsoft had a huge rebound in the quarter in it, because New York City cab drivers bearish from Microsoft going into the print. The data center abandonment theme, Black Cloud, Alfred Hitchcock type thing. But the reality was the exact opposite. And now you're starting to see the acceleration. That's the key.
Got it. Thank you.
Yeah.
Could you speak to short term for a minute? As far as volatility goes, how much further do you think this is going to go before things do start to calm down? Volatility's just been killing us.
Yeah.
It's been tremendous. Is that like right now, 6 weeks? Is that second term Trump? Is that 2026?
I think I think it's a 3 to 6 month vol is going to be pretty high. Because look, the reality is, I don't care if you're Republican, Democrat, you're purple, red, I could care what. It just comes down to they way overplayed their hand. There's just no other way to put it. They put a chart that's a trade deficit in a tariff chart, and now you're like, whoa, no, but what I meant was, it's a Costanza moment, right? In other words, now you start negotiating with yourself. Okay, 10, now it's 8, 6. So we're gonna go through that period. India is obviously what I view as the next big deal, South Korea and others. You're gonna have a lot of sort of especially in US, China, no, we don't like what we're saying. We might raise the tariffs again. Oh, markets. So we're going to go through what I view as a lot of, in terms of these companies, the stronger they get stronger, they can't be on the outside looking in. So I just believe right now the strategy, especially in growth, tech, even what we're seeing this week, it is an arms race, and that is just a reality. And there's, tech will continue to lead the market, and tech will continue to spend massive amounts from a capex and a balance sheet perspective. In terms of real estate, look, once tariffs, cooler heads prevail, you start to get to the reality of deals that's probably a 10% baseline and what's ultimately going to be a 10% reciprocal. Once you're done negotiating with the 190 countries, then the reality is Fed cuts, it's going to be bullish for real estate. I think then you start to actually put more oil in the machine, and you start to actually see home builders and others. So we view that as that's just the next part of the cycle. But Fed right now, hands tied behind their back. You're not cutting when you have the biggest inflationary policy in 100 years.
Dan, Jim Egerton from Chicago. Question is about the need for power to generate AI. And one day you read that we need to reactivate 3 Mile Island, and then the next day Microsoft says, well, I don't know how many data centers they're going to need. And then Chinese come out and said, well, ours runs on AAA batteries. So
DeepSeek, they spend $6 million. Oh no, I'm playing in the NBA tonight. Okay.
Where do you think this is all going to shake out? Are we overestimating the power, or are we underestimating the power? And is there a play that you can do something about? Thanks.
Well, first of all, I think there is a play, and we've said it, in terms of the grids, aqua, nuclear, I believe that's going to be a whole nother industry that gets, because from a power perspective, just put it this way, if we get to 20% capacity, first of all, there's more data centers under construction today than active data centers, just to level set. So more data centers are in construction so it shows where it's heading. If we start to hit anything over 20% capacity, the energy demands have to go up probably 5x from here. So I do, to your point, the AAA batteries, it's there is nuclear, there's no choice. Nuclear is going to be a huge catalyst here as one of those derivative themes. And I think there's going to be a whole nother energy play as part of this AI theme. Remember, when DeepSeek came out, 6 million, add 2 commas. Anytime those things come out, what are they using? They're using next-gen NVIDIA hardware, even though they said they did it themselves. You have to kind of forget some of the noise. That's the reality. But remember, nuclear and energy, the stocks were down 10% that day. It just speaks to my view. It is very heavily tied, despite maybe some playing it down.
We have one more over here as well.
Hey, Dan. I run a technology consulting firm out of Dallas. And over the last 6 to 9 months, we've been talking to a lot of CIOs of large manufacturing companies out from the Midwest. And one of the main themes that they are thinking about for the rest of 2025 and 2026 is to bring AI capabilities into their enterprise, which tells me that they're willing to invest a lot in one of the 3 hyperscalers. So my question to you is, out of all the 3 hyperscalers that are playing in this area, which one do you think is best positioned to take advantage of this?
It's a great, look, Redmond and Nadella, they're playing chess, and a lot of the others are, I wouldn't say playing checkers, but they're much further in terms of Amazon, Google. And I just think where Microsoft's position, not just on OpenAI, but because enterprise, that's their backyard, they're playing a different game, in my view, relative to on AI as well as our infrastructure. And look at this last quarter. Like now you're seeing an acceleration. Goes back to that point, like now you're actually going to start to see a spend, but Microsoft, look, it's a Jalen Brunson situation where they are. Knicks and 6. Okay.
We have one quick question. There was a big conference in Toronto on Bitcoin and cryptos. Do you have any thoughts on that?
I mean, my view is like, look, I mean, and Tom Lee, he's here, he'll talk about it in terms of like bullish on big. I mean, it's a risk-on asset. More and more companies are going to, I'm not saying they're going to have to go full seller mode, MicroStrategy, but you're going to see it more and more on balance sheets. It's a deregulatory environment. And it's a very positive environment for not just for Bitcoin, but even things like blockchain and others. I know Scaramucci talked about it in terms of like from an actual software perspective. And I think that's another important theme that's playing out.
Wonderful. You're amazing. Thank you, Dan. I know how busy you are for coming. We really appreciate it.